The following segment is sponsored by LT Gray Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. LT Gray Silver Corp. is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at ltgraysilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
It's great to be back, Ellis.
I read the Morgan Report, and this week you spoke of things that I don't recall reading about in print from you previously. Let's begin with this. You're comparing these times in the market with certain fundamentals in place to the time period just directly before September 11, 2001.
Well, September 11th, we all know, at least everyone in the U.S., and the commitment of traders at that point in time was the most favorable to gold and silver prices going up because the commercial interests, which commercial interests in all commodities are, as it implies, commercial. So it'd be for lumber, as an example, the lumber manufacturers would know more about the lumber business than probably anybody else. So usually that's considered the smart money. Gold and silver are much more involved in that, but there are the commercial category. And, of course, the event happened, and the gold and silver both really took off substantially, and they didn't actually, they kind of did a popcorn rally, a massive move up, and basically came back down shortly thereafter. But what was interesting about September 11th was that there was this huge short bet on some of the airlines ahead of the event, which, you know, you can think about how would someone know unless they had pre-knowledge, and it's also a fact that some of those were never collected upon. So I'm not saying anything is going to happen. That wasn't what I was intending at all, and that's not what I wrote. What I wrote was that we haven't seen this kind of situation set up in the Commitment of Traders report that was as favorable to gold going up or silver going up for a very long time, meaning since 2001, so we're looking back 12 years. And I also mentioned that in the 12-year time frame, that a lot has happened geopolitically that would make gold and silver prices fundamentally stronger than they were back in those days. I mean, look at what's happened. Not so much with the war on terror, although you could put it in that context. I chose not to. But more what's happened on the ground in the Middle East, and of course what's going on with this Arab Spring and, you know, the Occupy Wall Street and all this civil unrest that's taking place around the globe due to the fact that the economic conditions, although they may be improving temporarily, overall the trend over the last decade or more has been down, not up.
Are you suggesting, based on these numbers and some sort of unspecified algorithm, that something is going to pop?
No, not necessarily. What I am suggesting is that the Commitment of Traders is a pretty reliable tool. It's not all that great at timing, but when they're at an extreme level like they are right now, that the probabilities are much greater. Probability of an event, no, I don't think so, although I wouldn't rule it out. But what I would say is that it's much more likely that gold and silver are going to go up, and that is really kind of contrary to what almost all of the gold bugs are saying right now. I mean, almost everybody that's in our space, being the gold and silver commentators and those that are pretty bullish gold and silver overall, are pretty bearish right now. And a lot of people at the last event I was at, which was the World Resource Investment Conference in Vancouver, were neutral to bearish. I'm the opposite. I'm saying I expect a rally here, and I expect a good one. I expect it to be short-lived, meaning 3-4 weeks long, but I think it's going to carry gold and silver higher. We certainly saw a pretty good move in the platinum market today. So we'll see. I could be wrong, I could be right, but again, the percentages, the probabilities are very strong that we'll see a move up in all the metals. And again, for how long or whatever, we don't know for sure. My take, my work, suggests that it's not going to be a very long time, but it'll be notable enough for people to start paying attention. These markets do go both ways. They do go up as well as down.
We'll be right back. The Ellis Martin Report is sponsored by LT Gray Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
You know, we have these days that break on through into sunshine from time to time where the gold market is up $20 or higher in a particular day. This never really makes a trend, though, does it? You'd like to see upward mobility in the market for at least 3 days before you call it a positive trend.
Right. I mean, I always have said one day does not make a market, and I'll hold to that. Nonetheless, it always has to start on a given day, more or less. In other words, if you have a neutral trend and you break through a resistance, and it has to do it one day, and then it has to follow through the way I trade. But again, probability, I mean, trading is not as difficult as a lot of people think, but it takes discipline, and it takes adhering to rules, and it takes an amount of discipline that, quite frankly, in my experience, doesn't make me right, doesn't make me wrong. But again, in my experience, few people have the ability to really do. They think they do. They'll start and they'll have a set of rules, but then, and they'll make an excuse to break the rule. Well, if you do that, you're going to pay for it. The market will teach you a lesson. And a lot of people get taught the lesson 1, 2, or 3 times and they're out, meaning that it's a very harsh master. You have to either strictly adhere to it almost in a mechanical way without any emotion to be successful, or if you're going to get your emotions involved or add in the fundamentals or whatever, you could end up paying for it. So most people I advise to not trade. I just happen to be one that can trade and invest and separate the two. But most people are either investors or traders, but there aren't that many that do both. I happen to do both, but my trading is longer term, what I call position trading. When I put a trade on, I'm looking for that to last weeks or months, not days. But the market is the market, so sometimes I'll put a trade on. I did one recently going along the silver market and was stopped out about 3 days later. And I'm not afraid to take a loss. Things people that don't understand about trading, if you're disciplined, is you can lose, and then win, and that one win will make up for those 6, 7, 8 losses. But again, you have to have the discipline to be able to do that. And most people can't take it psychologically. They just cannot take the psychological time you lost, and you lost, and you lost, and you lost, and you lost. Because every time you lost, you're taking money away from your account. And then you get that big win, and it makes up for all of those losses and plenty more. And psychologically, that's a huge boost. But again, a lot of people just can't handle it. Again, I really tell people, you really don't belong trading these markets for the most part. There are, again, not in my experience, many people that can do it successfully.
You mentioned rules, and I don't think there are any rules right now except maybe mob rules. And I don't mean crowd rules. I mean actual mob rule.
Yeah, I tend to agree with you. I mean, and I've tried to be very objective about the whole thing from the get-go. I mean, I've talked about the manipulation and my take on it. And just to repeat, because I always get new listeners on your show, Ellis, but I don't think the overall trend can be manipulated, but certainly within the trend it can be bashed down and moved all around, and that does happen. It happens in almost any market out there, and it's been going on for a very long time. What I say usually in the report is, manipulated or not, here's where the market is, and the market can move either direction. And for me to be happy, it's got to perform this in this amount of time, and then I'm going to perform or accomplish this. So in other words, I've always tried to trade, I should say always, the last many years, many years, I've made the market prove to me what it's going to do, not the other way around. And this is kind of the Richard Russell approach, where, and I don't want to tell the market anything, the market's bigger than all of us, even the Federal Reserve, although certainly, again, coming back, they can certainly move the markets around and do a lot, but they can't change it forever. Anyway, back on point, they can watch the market. The market does a certain action. Based on what the market does, you can make a decision. And again, that's what I've done time and time again, sometimes successfully, sometimes not, but overall successfully. And that's the way I think that a lot of people are interested in learning how to do.
Well, you mentioned the airline stocks earlier in this interview and how they may have been shorted in advance of September 11, 2001. We all know there's been a great deal of suppression going on right now, and you could say the sanctioned shorting of gold and silver, because no one seems to mind or to be able to stop it. So naturally, something may happen eventually. It may not be a crisis, but something may give us that rally, whether it be short or long that you've been alluding to all this time. It seems that there is really no harm in not trading, but coming in and accumulating.
Right. No, I agree. Probably the most frequently asked question that I receive is almost monthly. And it goes, why can't the banks continue to move the price wherever they want? And the answer is simply that paper doesn't equal physical. It's really that simple. But, people get discouraged because, they get in at $30 silver, for an example, and then they watch it, hold the $26 level for quite some time, and then it breaks down to that level and hits into the low 20s, and they really get discouraged, and I don't blame them. And they read a bunch of stuff on the internet of how that's accomplished and why it's these huge paper sales and not the physical market. And, why can't they continue to do that forever? And I just keep getting that question, and it's a good question. But again, the answer is that it's a fiction. It's a non-reality. It's a derivative. It's something that has no real value. A piece of paper that says gold on it has no real value. A gold coin has real value, and they are not equal. Now, I'm not making light of the fact that a bunch of paper that says gold on it cannot move the market price around. It does, but it can't do it forever. And we're already seeing great signs, I think, in the gold market, more so than the silver market, where Germany wants its gold back, but the Fed says 7 more years you can have it. This Ambro Bank and a Dutch bank that had a lot of physical gold holders wanting their gold, saying, no, you have to settle for cash. COMEX inventory of physical gold is being depleted at a rapid rate, and there's very little gold on the COMEX. Always was an extremely small amount of gold on the COMEX because it's all paper trading for the most part. So I think there's going to be more and more pressure that builds up. We're seeing it before our eyes, so it's there for everyone to see. It's just how do you interpret it? My interpretation is that it's going to happen, and no one knows exactly when, but I think we're getting very close. It wouldn't shock me, for example, to see it happen sometime in, say, 2014, where it's not only Germany that wants to go back and is told, well, just wait a minute, give us 7 years, but somebody that's maybe in the hedge fund community or something could blow up that all of a sudden none of us are thinking about right now, as an example. Oh, who knows? Maybe the Bank of International Settlements. I don't want to make up too many what-if scenarios. But the probability of something going wrong exists more and more. The more they paper this over, the more they're putting themselves or painting themselves into a corner. And it's only a question of time where they're in that corner and they can't get out of it. Again, when that happens, no one knows. But I think we're getting extremely close. And it could happen in the silver market as well. And just to continue on, I'll try to be a little briefer, but I always thought it would take place in the silver market more than the gold market, because the silver market's a smaller market and it's more diverse, meaning there's a lot more small, mom and pop investors out there that buy a roll of, silver coins or 1 bar, that type of thing. So it's spread out more than the gold market. That's usually higher net worth people and primarily bank transactions and hedge funds. But nonetheless, gold is much more accepted as a monetary asset than silver is. And because of that, it's been oversold probably as much, if not more, than the silver market. That means that we're going to see a lot of problems, again, coming to the fore.
You factored into this equation somehow, and you spent quite a bit of time on it, the lining up the polarization of the big world powers. You lump China, Russia, North Korea, Iran, Syria, and Brazil together. And then, of course, the U.S., Israel, NATO, Western Europe, and Saudi Arabia. Then you mention Russian subs heading into the warm waters of the Mediterranean, which means we're headed back to where things were in the 60s and 70s, except there's more players. This military positioning, if not polarization, has been going on for quite some time. Why is it relevant in this picture that we've been painting here?
Well, the relevance to me is that, a lot of people, especially that are in the gold-silver community, are very familiar with the term New World Order. And you hear Gordon Brown and George Bush, Daddy Bush, you hear it all the time if you listen to the mainstream news. And there seems, in my view, that there's this misconception that the New World Order is this bunch of elites that have everything planned out to the nth degree, and they've got this idea of how they're going to control the monetary system from here on out, and it's this one group and they're all in agreement. And I'm saying absolutely not. I don't discount the fact that there isn't some New World Order or some group that wants to have this ultimate control and power. But what I suggested in this report is there's two factions driving for the New World Order. One is the group that's basically Asian-based that started their own World Bank type of entity, and on the other side you have what I call the Anglo-American Axis, which has held power for a very long time through the IMF, the World Bank, and the Federal Reserve. And they're basically at war with each other. That's my word, and I'm putting war in quotation marks, although there is actual wars all over the planet. And it's all about the petrodollar, because the strength of the dollar is, one, it's the reserve currency of the world, and two, it's the only asset that's accepted for payment of oil. Now, when Saddam Hussein tried to go to the euro, troops were on the ground. When Gaddafi tried to go to the gold dinar to pay for oil, troops were on the ground. So the fight, in very clear terms, I don't think there's a lot of ambiguity around this issue, is about who is going to dominate the ongoing New World Order currency. Is it going to be the East or is it going to be the West? And there's a fight over that right now. And I think it will continue. And I questioned the end of that premise by asking, how far is it going to go? Is it going to go just an economic challenge? Or is it going even further, where these wars that are present, are they going to escalate into a World War III situation?
Well, this is the first time in years that I've known you to really ever broach this particular subject in an interview with me. I've read your report. I find it highly unusual coming from you. Why now? What's the reason for your publishing this?
Well, the reason I wrote it was to give confidence to people that are already into precious metals that may be at a paper loss. I emphasize the word paper loss. You've only really lost if you have to sell, and I'm certain there's people that may have to. But the conviction that they need is one, I think, of the purposes for the Morgan Report. And if you look at what we just discussed, why would you sell your gold or silver? If you agree with me, I would say that it's probably one of the best assets you could have. Look at what's going on in Turkey right now. Basically, you go back just a few months and it wasn't nearing the chaos that it is now. And that may come to the U.S. at some point. I don't know. Things are heating up everywhere. There's a lot of distrust. The economic system is under extreme stress. The powers that be are under extreme stress. These people are going to the streets not because it's something fun to do. They're going to the streets because they want their governments to be restructured. They want these people that are in office out. They want these rulers gone. They want change. They want real change. And they're willing to risk whatever it takes to go out there and protest. So it's uncertain times, to put it politely, and it's escalating. So the trend is very clear. And gold, it's always, like many gold bears, it's an inflation-only hedge, and I call it a crisis hedge and an uncertainty hedge. And do you think times are becoming more certain or less certain? Maybe in the short run things look a little better and are improving, and perhaps they are, and I hope they are. But I think in the long term, those macro trends that I wrote about this month, that, as you say, I very seldom talk about, are important to keep in mind, because I call it the big picture. If you have that view and then say, I don't think selling my metals now is a good idea, that's kind of the idea I was trying to give to our readers, was that really it doesn't look like it's a great time for me to be shorting the gold market here or shorting the silver market here. It looks like a time I'd want to be accumulating.
Let's say hypothetically that the Fed's involved and the banks are involved in shorting gold and silver. They're only benefiting, in addition to anyone else interested in the precious metals, the Chinese and the Russians. They're accumulating, and they've never stopped accumulating. they'll buy it at, let's say, $1 and sell it back to everyone else at $5 or $10.
True. I mean, I said that in the report, as you know. Ellis basically said, we're kind of doing them a favor, and it's unfortunate, but that's the reality. I mean, they'll take all the physical gold they can get, and they're happy to buy it at a discount. They're not really concerned about how many U.S. dollars it costs. They get it for some less. That's great, and they're smart buyers. They're not going to buy so much in any one fell swoop that it's going to move the market substantially. They're going to buy it quietly over time, and they just keep accumulating more and more. As I said in the report, hypothetically, and let me repeat the word, hypothetically, or in theory, if you just went to an economic war only and not a shooting war, you could say, we've won the economic war. We own this much gold. The United States really doesn't have any, and here's why. Because, they could prove that, maybe, maybe not. It was my theory. And that's it. Game over. We're backing our currency with gold. The U.S. doesn't have any, doesn't have the 261 million ounces that they claim. And game over. We are now the reserve currency of the world. You're not. We're the new world order. We're making the rules. We have the gold, and you in the West don't. So the shift has come from the West to the East. Now, let me be clear. I'm not saying that I want that. I'm not saying that I'm actually predicting that. What I'm suggesting is that you think about it. I mean, one of the main premises of the Morgan Report, my interviews and everything I've done since I started this business, was to get people to think. Doesn't, mean that I have all the answers, but I certainly want to give the right questions.
That's fascinating, in that the Chinese can actually issue a currency, maybe not a paper currency, perhaps maybe a paper currency based on the gold that they have. Countries like Argentina, which are not friendly with that Anglo-American bloc that you referred to earlier, the extended British realm, very much in play, led by the U.S. actually. And these other countries can just say, you know what, we'll trade in your new currency, and here's what we're going to offer you in exchange. Those commodities you so desperately need, China. And the Chinese are actually doing their very best to obtain every relevant commodity in the world outside China right now.
Well, let me be clear again. It was theoretical. It was a hypothetical situation. And will we go back on a gold standard on a global basis or not? No one really knows. What we do know is that through history, that's been the most stable and it's been the most powerful. I mean, when Great Britain had the ultimate monetary power, they basically were a gold-based currency. And then they slipped away, and the United States became the supreme currency after Bretton Woods, after World War II, and that was a gold-based currency, really. I mean, the U.S. dollar was convertible internationally, not internally, but internationally for gold at $35 an ounce. So what I'm suggesting that China could say that we're a gold-based currency. Now, whether that'll happen or not, who knows? But the idea is very clear, that whoever has the strongest currency, and by the way, it does not have to be gold back, would be the reserve currency. So I'm saying there's a currency war going on, and the currency war is, again, between the Anglo-American axis versus the East, which is the groups that you outlined. And I'm very strong about that. I think I'm correct as far as that's what's really going on. So again, this idea that all these bankers are all together and they all agree and this is how it's going to go down is not settled at all. In fact, there's these two factions and they're basically at an economic / shooting war with each other, and how it's all going to end, no one really knows.
Are these the worst economic conditions that we've ever seen in our lifetime, yours and mine?
I'm not sure how to answer that, but I'll answer it. I mean, I think economically, are we in the worst times? And I would answer no. I just base that on the amount of stuff that's out there and the amount of goods and services and, the productivity increases due to the computer age and the information age and on and on. But I would say that we're probably at the most uncertain economic conditions. So I'm trying to be very clear here and not doublespeak. I'm really trying to be clear. Yeah, the economic situation's bad for a lot of people. I understand it, but I don't think it's the worst we've seen. But what I do think is the uncertainty is greater than it's ever been. So what I mean is that the chances of my career job being a career, in fact, if I can digress digress a moment. I have two girls in college. And, sitting at dinner not that long ago, I explained to both of them, regardless of what they get their degrees in, be prepared for 5 career changes. That's how fast the world is changing. They might start a career in the medical profession and end up doing, 2 or 3 or 4 different things before their career ends. I mean, I outlined to them that their dad's career right now is based on something that didn't exist when I was their age. The Internet didn't exist when I was 20 years old. So I think that's something that people are not really thinking through. Perhaps some are, but many don't. And so the idea of change is what you have to get used to. You have to be able to adapt, you have to be flexible, you have to be able to change with the times, and they are changing rapidly. So again, to repeat, I think the economic instability is probably as great as it's ever been, just not only the times, but because of all these things going on, the geopolitical, national, and international levels. And yet, at times, you've got the ability to feed the planet, really, but there's problems with distribution and that type of thing. But nonetheless, the economic situation is really not that bad, but the underlying financial things are so overstressed and so unreliable and unpredictable. That's what the stress is.
Is the worldwide rioting basically just about money and food?
Well, I think it's the other way around. It's primarily about food and money. I mean, everyone needs money, just about everyone. And, as Gerald Celente says, to repeat what Gerald says, when you've lost everything, you've got nothing to lose, people lose it. And so that's where you say, well, I'm hungry, or I don't have enough money, or I can't pay this or get that. I've got nothing to lose to go out there and protest or throw rocks at whatever the establishment is that they're upset with. And so that's what's taking place. So I think it's over food primarily and money secondarily, but you could probably lump them together. I mean, in today's economic times, unless you're in a tribe of some type, everybody needs money on the planet. That's why, when I did the Morgan Report, I call it money, metals, and mining. Money transcends everything. It transcends race, it transcends creed, it transcends nationality, it transcends everything. Everybody needs money. And that's why it's so important to understand it, what it is, how it comes into existence, who controls it, why they control it, what they're going to do with the control, and on it goes, because this is extremely important. People really don't put much thought into it. It's like, well, there's the bank, and I put my money in the bank, and that's about as far as they think. They really understand monetary history, much clearer picture about what this whole top-down control situation's all about, and why money is power, and why it's so important to understand what a free-based economy is all about versus one that's a top-down control system.
Well, we've covered a lot of ground today, and I don't think I feel any better than I did about world affairs before we began this interview. Of course, I don't feel any worse either, but I think we can come away from this interview knowing that there's, again, nothing wrong with investing in the long term in precious metals.
Well, I agree. I'm not here to spook anybody or scare anybody. I do not like playing the fear card, but I do like being a realist, and I'm unabashed about putting my views in print and making the arguments for them. I'm also willing to change my mind or admit when I'm wrong. Certainly was wrong about the levels for gold and silver holding. I really thought the 1550 level would hold for gold. The reason I said that earlier was because the fundamentals were so strong for gold, and all these anecdotal and provable incidents were taking place where people were getting their physical gold. So I thought that physical reality was going to be strong enough fundamentally to keep the price from going much below that point. But, these paper traders can do pretty much what they want. As you said earlier in the show, let me emphasize, the rules that are in place aren't being enforced. Basically, there are rules for how much you can sell short, but everyone ignores it. That's why on previous shows I've said you can sell as much as that doesn't exist as you want, because that's what happens. That's what takes place. That's why these prices get smashed so badly, and yet there's no enforcement issues around it, although there could be. There should be. They're in place, but they're not enforced.
David, any plans for the next few months? Summer's officially here, at least as far as the market is concerned.
Well, as much as I love what I do and I'm passionate about it, I try to balance my life. So, yeah, I'm going to do my normal whitewater raft trip later in the year, in the summer, and I've got a couple other trips planned for pleasure, and I'm just going to keep working hard to try to get our subscribers to hold on and buy when they should, which is now. We're basically at a 30-year low on some of these mining companies. Some of them are selling for less than their cash value. These are opportunities on a value basis that I don't want to overlook, yet there seems to be very little interest at this time. People are much more enamored with the stock market going up. I think personally that's a mistake. I think it'll last a little longer, but I don't think it'll last long term. But I try to keep an open mind. I certainly just don't see where the value is other than in the metals right now.
And that applies to a choice select few mining companies as well as the physical metal, correct?
Yeah, pretty much. I mean, generally speaking, I mean, if you go just on the indexes, almost everything's at a discount level. But you got to be very careful, because if this continues on, and it certainly could, then you certainly want to pick situations that have good cash balances, a good treasury, profitable even at these levels, and continue to be profitable at these levels. So certainly you got to be very selective, yes. But as far as the sector as a whole, no. I mean, just about everything's been beaten up, and you can find value actually fairly easily. But again, you've got to be very selective, because you might find something of good value that might have, let's say, a good deposit, but it doesn't have enough money to keep the business going for, let's say, another year, if that's what it takes. So that's what I mean by selective.
While you never make any recommendations to buy any specific company, the companies that you like and those that you follow are certainly on the Morgan Report.
Correct, yeah. I always have advocated that no matter how much we like any given company, you have to have a portfolio of companies, because something could go wrong in the last report. Luckily, I always hold off to like the last possible minute, more or less, to publish. We had one that really we had written up just a few days before, because even at $1,400 gold, it was actually pretty darn profitable, and we projected out what it could do. And the company decided at $1,400 gold that wasn't that profitable, and they decided to just give up. And it was on Casey's list as well. One of my associates sent it to me, and I said, wow, thank goodness we caught that, so we had to rewrite that section. And then another one we have, which is one of Sprott's that I really liked, and I think it's a good way to gain a lot of leverage in this market in the junior area without having much risk. And we've had it on the list for some time. It was off about 35%, I believe. I'm doing this from memory. You can look at the report. It might be at 37. And Sprott actually bought it out, so the loss is down to like 10%. So the loss is less, and I'm recommending to hold it, because I see it as a stronger situation than ever. So those two changed within a couple days of each other. So these are two things that are, one unfavorable, you could say, and the other favorable. And that's the breaks in any business, again. But if you bought just one of those, you're doing yourself a disservice, because there isn't anyone in this business that can just pick one stock and get it right every time.
Well, David, again, another enlightening conversation touching on several issues of import affecting the financial markets and precious metals. Thank you again for joining me today on the program.
Thank you, Alice. It's always a pleasure.
I've been speaking with David Morgan of themorganreport.com or silver-investor.com. Listen to the segment again on the podcast page of our website, ellismartinreport.com, and download the Ellis Martin Report in its entirety on iTunes. This segment has been sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.